presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom, how you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great weekend, folks. TGIF. Ask for what you want. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right to ask. Therefore, others have the right to ask you for what they want, and you have the right to say yes or no. Market-wise, let's take a look at it out here. We have the Dow Industrials up 353, NASDAQ up 192, S&P's up 42. Gold contract up $20.80 at $2,545 an ounce. We have silver up 80 cents, $30.27 an ounce. Light sweet crude up $1.86, $74.87 a barrel. Notes and bonds, they're on the move. Get the 10-year note up 14 ticks, trading at 113.23. The 30-year up 20 ticks at 124.21. And King Dollar's down 808 ticks at 100.7. You get the euro at 111, the yen's at 144, and the British pound is at 132 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. And the world of the NQs, let's go there first, okay? Because the NQs are weaker than the SPY. And I suspect we're going to have get a sell down coming into this close. And we're just going to see whether it's going to go basically to the highs of the last downdraft, or is it going to crack it? You know, the bottom line is that we have two separate numbers here. We had the first high volume low came in at 1050. And then that got tested. It got tested with lighter volume, by the way, at 1240. So on the downside, I suspect we're still going to get to at least the high of that low, which is 591. And we're at 735 right now. I'm not saying the 19,000. So 19,000, we're at 736. The number would be 19,680. Now, the bottom's 19,591. We could hit that in a second. There's nothing that says this market wants to go higher. The last, that's 4, 8, yeah. So the last 80 minutes, all those bars there, you can see that the volume just died off, period. Died on the vine. We go to the E-minis. We take a look at the E-minis. You're going to see the same type of setup. But the E-minis are stronger than the NQs. We take a look at the E-minis. Same type of setup. You know, you can see that there's the first high volume low, and here's the second one. Now, the second one on the E-mini has 56.21, and we're at 56.40. So, and that is definitely, well, that's not necessarily a high volume low. In both cases, at 240, we were testing the, or 1240. We were testing the low that had been established out there at 1050. Gold. We go to the gold contract. Now, gold, we want to see some more volume inside the gold because right now it's about 163,000, 154,000. That's not enough. But the cool thing is that you pushed away from the breakout, which we had to do. We came down to 25.19 out here today and rejected it. And we're at 25.46. So now you're starting to move away from this. And in fact, if we go, let's go GC1. I'm just curious what's going to happen here on a weekly chart. Okay, so I bang this on a weekly. okay, not bad. That's a doji up there, which it's not cool. But even on a weekly, you're away from this breakout area, man. You're definitely away from this breakout area. So that's saying that, guess what? Higher prices are coming at us. We go to the 10-year note, and we take a look at the note market, because the market is way ahead of Powell and the rest of the Fed. You know, what you have out here now, what's happening is that we have volume coming in the 10 today, which is great, okay? 2.7, almost 2.8 million contracts. That being said, it's going to need more to basically get topside. This is still, you know, after the spike that we got up to that 115, you know, it's been sideways to down. Right now, the 10-year is at 3.799. The high for the last 12 months is 4.99. For the last 6 months, it's 4.7. For the last 3 months, it's 4.6. Oh, 4.6. Look at that. So this gets interesting. So we've almost come down in 1 month. No, 3 months. We've come down almost a point. And, of course, what's happening with the Fed's still at 5 to 5.25. So it's like, yeah, okay, well, they're going to come down. Well, hey, listen, man, they may come down 0.5 point. That'll blow some minds, but they might come down 0.5 point. You know, because they're at 5 to 5.25. The 10 is at 3.75. Now, at 3.75, let's say 3.75, that means mortgages are basically hitting about 6% right now. And the sweet spot, well, we'll find out whether that's a sweet spot. 5.5 and less is going to, you know, open up this market a bit. You know, what has happened out here is that you definitely have buyers that are jumping the gun here, meaning because what we did have out here this morning is that in the housing market, the demand side of it went up almost 10% in the last month. Let me see this 1 second. So if I do that, let me get this. Yeah, and that's a big number. There's no doubt. We're still dealing with small numbers. That's why 10% rise is pretty easy to do, actually. But bottom line is that you got to start. And I suspect what we are going to see is that you're going to see the aspect of when folks understand that we are on the other side of the interest rate structure, it's going to make a difference. Let's go take a look at, actually, Toll Brothers. Let's take a look at Toll Brothers and Lennar. So if we go to Toll Brothers, yep, there you go. Look at this, 670. This is really breaking topside, man. This is breaking all-time highs. Look at this. Look at the buys on this week. This is unreal. Look at that volume, folks. So Toll Brothers is at all-time highs. That is wild. Yeah, all-time high today. Lennar. Let's go take a look at Lennar. I guess it makes sense. It's only the beginning of it. We know how this, yeah, Lennar's at all-time highs also. Up 593. Put this on a longer basis. Yeah. Long time. Wow. All-time highs, man. There we go. Dow Industrial's up 405. Nasdaq's up 230. S&P's up 51. Stay right there, folks. Come right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee, so what are you waiting for? Don't let the market leave you in the dust.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. The Dow Industrials up 398. You get the Nasdaq up 228. S&Ps are up 51. Let's take a look at some of the higher volume equities out here. There we go. You have NVIDIA up $4.50. We have, let's see, Marathon Digital up $1.70. This is pretty intense here. This one here, man. I'm not going to bring it up. There's an equity, a Chinese equity, folks, that's down $29.83, trading at $2. It was a pump and dump for sure. Yeah, I might as well bring it up so you can see it. This is like sick. This would be a tough thing to wake up to the morning. It's called UBX Technology. Operates a holding company. Companies offers value-added services using artificial intelligence. Bottom line is, I'm sure it's a scam of some kind. From China. Now look at this. Look at this chart, man. This is sick. So you go back to August 2nd. It was trading at $2. Where was August? Hold on 1 second. That's $5. Was it the day before? No. Okay, it was trading $5. Goes all the way up. The day before yesterday, it was $35. Yesterday, it closed at $31, and it opens today at $4 and goes down to $1.20 and it's trading $2. Toast in a monster way. There's no doubt about that. You get, let's see, Apple's up 2. Apple's trading $2.26. Inside the NDX. Okay, so winners versus losers. Inside the NDX, you get Workday up 12.5%. Warner Brothers up 6.5%. Tesla's up 4.5%. Arm Holdings up 4.5%. Taken away from it, Intuit's down 6.5%. Pinduoduo's off 5%. Micron's off 2%. Synopsys is off 1%. We're going to take a look at the small caps out here that IWM will use here. We'll take a look at the IWM. So that's got some juice in it today. Up $6.40. No doubt about that. Let's put this. Well, that hasn't made the highs yet, meaning after that downdraft. Yeah, it's going up to the highs with light volume. It's not a great sign, that's for sure. Now, let's go. I want to go over to the dollar again, because this is why gold's going to go to the moon, folks, okay? The dollar. Okay, so let's bring this up here. First, I'm going to do it on a 10-year monthly, because you can see quite clearly. Here's your first range. Your first range you're coming into the bottom of the consolidation with conviction. Conviction meaning, in this case, just a wide price spread. So we're already in the lower range. Once we get back inside the 102, we're in the lower range. We're at 100,676. That says, guess what? Where are we going? We're going to the next level down, which is 88. So that's a move, man. Now watch how this goes. This gets interesting. So 88 would be the move down here. But because if you get to 88, then it's like, okay, well, why can't we go to the next low? The all-time, well, I don't know if it's the all-time low, but why can't we go to where we were in 2007, which is 72? So you get a couple of different things happening here. The biggest one I'd say that can affect all of us is if you're going to Europe, go buy some euros, folks. That's what I do ASAP, okay? Because the euro, you know, bottom line is running out here at 111, I think. 1 second. What was it, 111? Yeah, 111. And that is saying if we just do the reverse of that, you know, the euro's going to basically go a lot higher. So if we take the euro, we're just going to go the swing points the opposite way. And you can see, you know, 5 months ago, the euro was at 106. You're at 111. We bring this out, and it's just going to be the opposite of the dollar. The next move, this is just ready to break the top of its consolidation. Then it goes to 123, 111 to 123. You break 123, you're going to go to 139, 140, and then 149. So bottom line, you go to, if we're going to 72 and the euro's going to 149, you can see the differential. The differential is absolutely huge, meaning that particularly the cool thing about that trade is that trade, the way you look at it, as long as you're going to Europe, you're not going to lose money. That's what it really comes down to, because the fact of the matter is you're going to use what you have. We go to the NQs for a second, and that bar actually had volume, this last bar. So this is going to get kind of interesting here. Well, let's see what happens here. 1 second. Because if I take it against what we're going into, now the bar itself had volume. So we'll see whether, now, if we come back under, right now, we're up 204 ticks. If we come back under, it's not much. It's this, and for the NQs, this is a joke, actually. It's 766. We're at 19,783. And what happens here, folks, is this. The market's trying to get higher. We just had a good bar, meaning a good bar that, you know, you had an expansion of volume. Now, that being said, it had better volume than the last 90 minutes, okay? 90 minutes. That being said, it's actually going into 16,000 contracts, and we only did 9. But all the rest of these, you know, did 8, 4. Yeah, there's 9 bars there, so it's 90 minutes. So if we get back underneath this, and there's, let's see, is that 24? 824, yeah. So if we get back underneath this, then the game would still be on that it wants to go test that. If you don't get back underneath it, then they'll run this thing, man. And they'll run it with light volume. That's what it seems like. We go to the E-mini. Let's just take a look at the E-mini for a second. Same setup. Yeah. We were going against 39,000 contracts, and the spike had 19. And you can see that the E-mini is much stronger than the NQs. We're up 56 on the E-mini. You go take a look at, it doesn't matter what you bring up in the housing market, they're all up. And that, you know, this whole cycle, here we go. I mean, we've finished one full cycle. Now, specifically what that means, it means we went down on rates to 0. We went up on rates to, you know, 5.25. Now the real question is, where do we go? Do we go to 3.5? I cannot picture, you know, like Home Depot is up $9.30 right now, trading $3.74. If we go to, let me put this on a weekly. This is going to break topside next week. That's how this thing is set up. Well, look at this. It actually, Right from the bottom has had volume. They're buying this hand over fist, man. Yeah, they are. So that wants higher volume also. And I suspect no matter what we actually bring up inside of that market, because now there's a bent-up demand, inside of the housing market. There's been a shortage for a long period of time. Now you get a bent-up demand, and the rate structure is going with you, meaning that they're going to start to back down. Dow's up 430, Nasdaq's up 247, S&Ps are up 56. Stay right there, folks. Come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Dow Industrials up 450. You get the Nasdaq up 250. S&Ps are up 58. And, folks, if you haven't test-driven the gold report yet, or you want to do it again, check it out on the front page of TFNN. Bottom line is that we got a run happening, and I suspect it's going to be a lot further because that dollar is going to hell in a handbag. If we go look at the GDX, we take a look at the GDX and we put this on the weekly, what you're going to see is another breakout. And this is away from the breakout in the monster way because the bottom of that breakout is $36. We're at 39.45 is the next number. 41's the next number, and then it's 45. 1 second here, I'll put this up here. Yeah, there's the 41, here's the 45. So we're approaching the 41, we're doing it, we're gonna need a little bit more volume. Yeah, what's this, a monthly, what is it, 23rd? Yeah, we're still, close call. 482, 309, 482, 309. Let's see this. So if we take a look at this, 482, 309, 20. Yeah, we're going to need more volume. That's the real bottom line. But in the GDX, as that's moving to higher price, we do need more volume to get inside that. That's what it comes down to. Let's go take a look at the PPLT. So, once these start moving, man, they're all moving, okay? So you got platinum. Right now, this is the ETF for it. That's up $1.56. Still, much weaker than gold or silver, I can tell you that. Not a bad setup. Hasn't broken its downtrend yet, though. Let's see this. Yeah, it's a close call. It was broken the downtrend, but man, that is about as close as you get. So that's going to need some more juice. We go to the silver market, and we know silver is, you talk about volatility, man. Silver is like the ultimate in volatility. Okay, we're going to need more volume there, that's for sure. 29,000 contracts is not great contract volume. What is this? 1 second. So that there, this is December contract too. Yeah, we need some SLV. We're going to need some juice in that. We go to the SLV. Let's take a look at that. Oh, this is nice. The SLV, it's coming in. Yeah, it's coming in big time, man. This is good. The SLV is trading at 27.25. Put this on a weekly. Yep, we have it. Okay, you get the expansion happening. 101 million shares this week. That's what you want to see. Last week we had 77 million. This is going to go after the high. And the high is a high volume high in the SLV, which is cool. That is laying out at 29.56. So that's good action out there. Let's go take a look at Apple, because Apple just won't give it up, man. It's pretty amazing. I said, well, it's not an all-time high again, but Apple also has that high volume low. I mean, all these equities are this high volume low. That high volume low from the 5th of August is going to get tested, folks, okay? So it's really just a matter of, when this, my take right now is that we're in the turn. The turn's happening. The turn's a slow roll. That's what normally happens, okay? You get a slow roll happening. And bottom line is that that's exactly what I suspect is going on out here. And that's what it comes down to. We go take a look at the Tesla. So at Tesla, this thing has been up and down like, well, this is interesting. So it's up today at $9.70. Has just about as much volume as the down volume yesterday. So this is going to be tough for it to get through this area, because this area is this where we're coming into the gap lower, and of course that acts as major resistance. That's how this shakes out. When you get a gap, and in Tesla's case, we get a gap from 245 down to 225. That's a monster gap, man. That is no doubt a good-sized gap, and for an equity that's trading at that particular price. We go to the XAU, the HUI. These guys, XAU. These guys that, as they're going forward, they're building. Strength. And if we take a look at the weeklies on this, oh, look at that. That's pretty. We're way above the breakout area on this thing. And so the next stop in the XAU is up here at the 171 area. Right now we're at 157. Now the Gold Bugs Index That's trading out here at 319. And that level there, that's reaching up for the 328. These are some big bars, man. And you talk about how this thing trades. Week by week, it's pretty intense. You know, there's no doubt. The week of the downdraft, this thing went from 291 to 240, or 281 to 241, 40 points. Got it back in 4 weeks. Come down, tested again 2 weeks ago, and then just took off like a rocket ship. And, you know, if we take a look at the, oh, I know, one of the Tigers was talking about, check this out, man, this is intense. Now, this is the 3 times housing market, NAIL, N-A-I-L. This is the direction home builders 3 times. This is something else, man. And inside of this, what you have is that you got the home builders, the Dow Jones home builders. I got to find out what's inside of them. But the bottom line, these are the home builders. And when you do take a look at it, this is up $17 today. 17 bucks, okay? You know, the low that was established on the 5th was 109 or 157. I mean, today's a monster move. There's no doubt about that. And guess what? This could be the beginning of it, because what is intriguing is that the large home builders, folks, okay, they held in a monster way, even with the aspect of those high interest rates. Now, I can understand that fundamentally, because what happens fundamentally is the large home builders, they have an in-house mortgage broker. They have not the broker, meaning the bank, okay? And then, of course, they can do buy-downs. So, and then they'll basically make a lot of the units smaller, charge the same price, okay, per square foot, the whole ball of wax. And what tends to happen there is that now it's game on again. Of course, it's game on again. What you are going to have, you're going to have plenty of folks that are saying, hey, look, I think I want to get ahead of this, because if I get ahead of it, I'm going to do really well. Stay right there, folks. We'll come right back. Dow's up 430, Nasdaq's up 233, S&Ps are up 53. We'll come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the Newsletters tab.
Steve.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Dow's up by 429, Nasdaq's up 221, S&P's are up 51. Let's look at the Dow here first. You know, the Dow's been on its own for a while. It's really intriguing, actually. Yeah, look at this, man. The Dow's almost at all-time highs. So we're up 431. The all-time closing high is 40,000. Look at this. Hey, this gets interesting, man. Whoa. The all-time high is 41,376. That being said, the all-time closing high is 40,665. 1 second. Let me make sure of that. Oh, no. No, even 40,842. So the all-time high is actually the last time we went up there, the closing high. And if we close where we are, we're going to have an all-time closing high. Both times that we had gone up, they didn't hold the highs. Let me go look at the diamonds. So the diamonds are trading with volume. They got 3 million shares. The high is 4.9. Yeah, this will be the same setup, man. Be interesting. You put this on a weekly for a second. Oh, look at it on a weekly. Oh, baby, come to daddy. This is sick. Listen to this, folks. On the weekly, the high is 24 million, and we're coming into 24 million with 10. No, is that right? Yeah. Forget it, man. Forget it. And the low has 23. So we're going 10 into 24. Yeah. Let's go to the SPY and see how we're set up there. And put this on a weekly, too. Okay, so we're dealing with 208. Oh, exact same. Oh, no, 255. 255 million, 208. Same deal. I'll do the Qs, but the Qs aren't even close to the high. I don't think the Qs are going to hit the high, actually. That's the way this is kind of set up. Yeah, we're way lower. So take this, put this on. Yeah, same deal. Pretty amazing, actually. So the Qs in the weekly here have 147, and you're dealing with like 200 and 162. The high is 162, which is a low volume high. You come off the high with 204. So you know, we're going to have an intriguing 6 weeks here. That's what it comes down to. Because now the deal is, right, we know that the rate structure is going down. As I was talking about yesterday, I've never seen it where you just go down a quarter point. Most times you can get down 4 to 6 times in a row, one after the other after the other. Now, the real question is going to be, because of the way, let me put the 10-year up here for you so you can see this. Because of the way, you see that 10-year up there, 3.8, right? And then if we go to, watch, so remember 3.8, okay? And then we go to the Fed and see this at the very top. The band is 5.25 to 5.50. 5.50 is the discount rate. That's the rate that we're talking about going down, okay? So the next rate very well could be, you know, a half a point, because that rate there eventually will catch up with the 10-year. And right now you can see the differential is basically, you know, 1 1/4 to 1 1/2 difference. So the real question is that will the Fed come down a half a point instead of a quarter a point in order to catch up with the market? And we'll see, because I suspect we'll see, you know, it's the dog, the tail, who's wagging who. And it'll be really intriguing if traders themselves just decide that, okay, we're going to jam this rate again. Now, I can see that happen. The reason that I can see the rates going a little bit lower than what we're all expecting, even myself right now, is because there's so much cash out there. There's the amount of cash, folks, that is in the marketplace, and I'm talking about the stock market, the real estate market, is astronomical. That where the problem lies, and this is where the differential is between the haves and the have-nots, and the middle. The middle is where the real problem is, meaning wages aren't high enough. In order to basically save money is really hard to do. And when I'm talking about, when I talk about the middle, I'm talking about housing in between the 400 to 600,000 level. Because between the 4 to 600,000 level, you got to come up with 100 grand. If you just multiply, you know, the 7% or 6.5 times the mortgage, you end up with huge mortgage payments, plus you got to come up with 100 grand. And then all of a sudden, when you jump up to the million, it's totally different, because what ends up happening, of course, the asset structure that is in that market is totally different. They're either taking portfolio loans out or just writing a check. And that's it. What we've seen in the real estate market, in the $1 million one, and I'm putting a couple up this week, they're all, a couple of them, they're both over $1 million, is that the portfolio loans seem to be the ones that happen. That's what it comes down to. And you can see that in a second, because watch this. If you put the SPY up, this is good. I mean, we put the SPY up. So let's just put the SPY up and just say, okay, we're going to put it on a 2-year, right? Well, you can see what has happened. If you put 300, let's say you put 34,000 in the market. Well, you get 56 now. You put up, you know, you put 340 in the market, guess what? You get 561. And that's without leverage, okay? So that's without leverage. So if I cut this in here, watch how this goes. This gets really bizarre. If you're on leverage, you can put up 160 and you get 560. How's that? Is that sick? And of course we know that that's how markets work sometimes. The acceleration, and in fact, if we do this here, let me just do this again, because I want to show you, that was 2 years. If we do a year, it's even heavier, because the year was just straight up. Yeah, there it is, straight up. So picture this. 11 months ago, you could have put 400,000 or 200,000 in leverage, and you get 561. Yeah. That's about as intense as you get. Dow Industrials up 438, Nasdaq's up 223, S&P's up 52. Stay right there, folks. Come right back.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Dow's up 460, Nasdaq's up 246, S&P's up 57. Looks like we're going to stay right where we are, folks, okay? We get over here, we take a look. We're certainly not at the highs, but not at the lows, but we're at the higher end, that's for sure. Yeah, that gets interesting. So if we look at the NQs first, you're up 202. You had reached a high today of 19,904. You're at 19,750, 790 rather. Now watch this. This is where it's going to get interesting. So if I put the Qs up, yep, that's what you want to see. Well, if you think this market's going to turn. You see how yesterday we come down with 37 million. We're going up today with 32. That's kind of, it's subliminal, but this is kind of how it works when you start doing a slow turn. Go to the SPY. And the SPY is so close to its highs. My take is the SPY is going to hit the high first, just like the Dow will hit it too. Well, the Dow already did. The Dow, well, closing high. We're going to have a closing high on the Dow today. And that'll be the news for the weekend. We take a look at the SPY. That's 40 million. And we're right next to the high. The high on the SPY is 565.16. Yesterday we hit 563.18. Today we hit 563.09. When you get this close, it'll probably whack it Monday morning. We'll see how this shakes out. Now, if we look at a calendar for a second, let me just do this for a second. Calendar-wise, how are we set up here? Okay, so calendar-wise, oh, this will be interesting. So what you have here is that we're coming, we got like 4 days next week, and then they get the Labor Day weekend, man. So we're coming into window dressing again. This is going to get really wild, man, because window dressing brings in buying, right? That's what it comes down to. It's the 23rd. So we'll see how this baby shakes out. Don't forget, folks, if you haven't got the gold report, great time to get it. Come over to our website at TFNN. You're going to see it right under featured content. You can test drive that baby for 30 days. Have a great weekend, folks. Have a safe weekend. Come back and visit Tommy Monday morning. Kicks us off 9 a.m. Great show, folks.